Hey everybody, welcome back to Carbon DeFi X COTI, part 2 here. Thank you so much for joining me. Thank you to all of our viewers as well. We'll go do some quick intros just in case. I know if you're an existing community member, you definitely know of, at least 3 of the 4 guys that are joining me today. But for anybody who's new, who might have seen that you guys, just recently hit mainnet and Carbon DeFi is now live, and it might just be new to all of this, I definitely still want to do some at least quick intros, I'm going to start with you, Brad. Do you mind?
No, of course. Hi, everyone. Good to be here. Welcome to the space. My name is Brad. So I'm a COTI BD manager. I'm an ex-community member, probably in the community for about 4 years. So hopefully most of you know me. More recently working with COTI and helping to scale out our fledgling ecosystem. But very good to be here.
Awesome to have you. Thank you for joining us again. Soren, I'll pass it over to you.
Thank you very much, Jen, and welcome to everyone. My name is Soren. I've been with COTI since, or community member since 2019. Most of you, if you are familiar with our community, will know me as one half of the COTI Confidential setup. My partner in crime will introduce himself next.
Well, and with that, Tracer, go ahead and take it away.
Hey guys, like Soren, I've been around since 2019, mostly lurking, spun up a testnet node at the end of 2020, took a couple years to get on mainnet. Since then, I've been trying to join every single stream I could, hosting COTI Confidential, COTI Connects, and various AMAs with COTI partners. And I love hanging out with anybody from Bangkok. Thanks for having us, Jen.
Thank you so much for all of you guys joining us. Glenn, would you mind introducing yourself also?
Sure. Thank you for hosting this space. It's great to be here again with people from COTI. Like many here, I also was a community member back in 2020, and then officially became a contributor in early 2022. So that's a little bit about me on the BizDev side. And yeah, happy to show off Carbon DeFi, and hopefully, we can get some strategies going in the future on COTI, because, I think a lot of people here are excited to do some trading on COTI. The chain went live recently, so I know that tokens are sort of starting to make their way there through the bridge. There's a few things coming, so hopefully we'll have a lot of things to trade.
Perfect. Thanks, Glenn. I don't even know if we said that you are with Bancor. So the call is presented by Bancor. Carbon DeFi is a product of Bancor. So if you hear, anybody saying Bancor or Carbon DeFi, really kind of ultimately speaking to the same project, or at least that same, parent project, just to clarify that before we even start. Last time we ran through, I can't say ran through, it was a good solid hour, which you guys were fantastic, by the way. I was making clips of the calls, and it was like I didn't know which one to clip next. It was literally the full hour. Felt like I was clipping. But we ran through limit orders. We learned about range orders. We learned about recurring orders. Glenn, I see you sharing your screen. What I'm hoping we can do first, before we get into the auto compounding concentrated liquidity and the question that came up on our previous call, which was how token projects on COTI are able to create a liquid market for themselves. Maybe we can just give a quick recap of the limit, range, and recurring for anybody who didn't see the part 1.
Yeah, absolutely. So what I'm sharing here is this is the Carbon DApp. You can access this on coti.carbondefi.xyz. On COTI right now, there's only, I believe, a few tokens that you can trade. So you have COTI and GCOTI. These are the main ones. Eventually, COTI will also have stablecoins like USDC, which is a USD fiat-backed stablecoin, right? So this is going to be great. What I'm showing here right now, it's just so that everyone's clear, this is the COTI token against the USDC token, right? And this is the price chart of that token over time, right? So like one of the strategies that we were looking at last time was we were looking at limit orders, right? And limit order is essentially just like buying a token or selling a token at a specific price, right? So if you have, for example, like your project, you created your own token and you want to put this token up for sale on the market at a specific price, you can do that, right? So you can say, I want to sell my token for this other token. In this example, we're selling COTI for USDC, but the COTI token can be any token, right? This can be an ERC token that you might have minted or created, and you might want to put that token up for sale for something else, right? And then it's up to you to decide, what that price point should be. Carbon lets you do that, right? It's quite, I would say, flexible, right, when it comes to these things, right? So you can think of Carbon. This is what Mark, our project lead, he likes to say about Carbon. It's essentially like eBay on chain, right? Where anyone can go on Carbon or on eBay and they can put things up for sale, right? You can do the same thing on Carbon DeFi, except that in here, you're putting up tokens up for sale. This is like a limit order, just putting a token up for sale or buying at a specific price. Nothing too complex there. Range orders are a little bit more, I would say, they're more flexible than limit orders in the sense that you can decide, I want to start buying a token at a specific price, let's say $1, right? And then I want to buy that token from $1 all the way down to, like, let's say 50 cents. So in this scenario, you're buying a token as the price is going down, right? So you can think of this as a way to scale into a position, right? And you can do the same on the opposite side. You can also sell a token starting at a specific price point, let's say $2, and then all the way up to $2.50, right? And this is a way for you to scale out as the token is going up in price. Now, why are these useful? As in, why are range orders useful, right? One of the things that they let you do is essentially, because a lot of traders cannot time the exact top or bottom, meaning, the exact top or bottom of a price chart, right? You can essentially start selling as the price is going up and start buying as the price is going down so that you do not miss buying or selling, meaning that you might have to wait another cycle for this to occur. And then obviously this might be to your detriment. So like a perfect example is, let's say you might have an order to sell BTC at $150,000, right? One Bitcoin at $150,000. Let's say the price of Bitcoin during this cycle goes up to 149,999. This means that you missed selling by $1 because you had an order to sell 150. The price did not get there, and obviously you didn't sell. So what you could do instead with a limit order, or a range order, I should say, you can start selling, for example, at 125,000 all the way up to 150,000, right? And then obviously as the price of Bitcoin is going up slowly, then you sell this Bitcoin for whatever other token. In this case, this might be like a stable coin like USDC. And by the time it gets to 149,999, you would have sold most of your Bitcoin, right? Like more than 90% would have been gone, right? So even though the price did not get to 150, you sold the majority of it. So this is where range orders are useful because if you cannot time the exact top or bottom, which no trader can do, right? It gives you that flexibility when it comes to trading. I'll stop there on these two. I'll try to answer any questions if anyone has them. Otherwise, I'll go over to the recurring strategy.
So let's use that scenario, okay? And you're selling one Bitcoin, and you're going to sell it from 125 to 150, okay?
Correct.
So does it start selling it? So you're selling one, right? So does it? So it takes the range of $25,000 and it sells that whole Bitcoin equally through the $25,000 range. Is that correct?
Yeah. So the way you can think of it this way is like you take that one Bitcoin and you split this one Bitcoin into multiple different pieces, right? And such that between 125 and 150K, that one Bitcoin has been split and essentially it's been distributed across that price range, right? So this is the way to think of a range order in the sense that it's been distributed across two price points, right? And because the liquidity has been distributed, right? As the price is going up, then some of that liquidity is being sold off for the other token. So another way to look at it is if, for example, you were trading on like Coinbase or Binance, what you might have done is you might have created like, let's say 10 limit orders, right? Each one 0.10 in size between like 125,000 and 150, right? So you have 10 discrete limit orders, each one selling 1/10 of a Bitcoin between 125 and 150, right? On Carbon DeFi, essentially the liquidity is continuous, so it's not discrete, but you can still try to achieve this on like a SEX by lining up the order book with hundreds, if not thousands, of limit orders between two price points. We just make that easier for you on chain, so you don't have to do that behavior. So that's a way of thinking about it.
So this distribution is decided by Bancor. Sorry, Tracer.
Sorry, say that again.
So this distribution between 125 and 150, why decided, or does Bancor decide it?
You decide. Yeah, you decide the distribution, as in you decide like the price points where you're gonna be distributing the liquidity across.
Glenn, I think if I may, Soren, do you mean the actual price range? The price range itself is custom. So you can choose where you want to start selling and what you want to sell up to. But as far as how it's distributed throughout that $25,000, what it does is it takes an average price of that $25,000 and it makes sure that at the end of the day, if that entire Bitcoin is sold from that, between that range, the 125 and the 150, that you're going to wind up with that average.
That was my question. So I don't have to, like in the other, like on the central exchanges, I have to put in 100 limit orders. Here, right. I just put my range, sell that Bitcoin between 125 and 150, and Carbon DeFi takes care of the rest. That was my sort of question.
That's it. Okay. Yeah. You don't have to do any of the math. You don't have to try to set all of those orders and all of that. No, you're literally just choosing your token pair. You are choosing where you want to start selling, where you want to, start and stop selling at, like what that range actually is, and how much you want to fund that range with, how much you want to sell. And then Carbon DeFi on the back end does everything else.
Yeah, absolutely. And what Jen was saying, I guess the question comes like, if this order gets filled 100%, right? What is your average execution price? For range order on Carbon DeFi, we tell people that it's the geometric mean or the geometric average, right? And the way you calculate this is you take the start price and the end price, you multiply them together, and you do the square root of that. So in our example, where we're doing 125,000 to 150, your average execution price, it's 136,930 to 136,930. So if this order gets filled 100%, that ends up being your average execution price. So this is how Carbon DeFi functions when it comes to range orders, right? So those are range orders. I think we'll do the recurring order real quick, just so that you guys are aware. So recurring orders are essentially either two limit orders, two range orders, or a limit and a range order put together, so that you can have what we say it's a buy low, sell high strategy. So in this example, I have an order that's buying down here at a specific price, and then I have an order that's selling up here within a price range, right? But I can also make these two limit orders. So buy a specific price, sell at a specific price, or I can do the opposite as well, where I'm buying at a range and selling at a specific price. So you can choose and combine these two things, or you can just do two range orders. That's also a possibility. Depending on what you're choosing, it's up to you, right? What you want to do, whether it's limit, range, or a combination of these two things. We give you the flexibility to do that. One of the things to notice is that I don't think this is going to be a problem on COTI, for example, but on other blockchains that tend to be, for example, more expensive to transact in, right? You might want to have a certain amount of liquidity because otherwise you run the risk of that order not filling properly, right? So I'll give you a quick example. let's say you're operating on Ethereum mainnet, right? You had one token for sale at $1, right? And let's say like the arbitrage opportunity, in order for someone to like buy that token is more than $1. Let's say the transaction cost on Ethereum mainnet is like $5 or $10. Well, it's more expensive to transact than it is for you to buy the token. As in, you're only selling $1 worth of this token. It's going to cost me $10 to actually make the transaction. What this means is that most people are actually not going to buy that token because you're just selling a quantity of one for $1, right? Now, on the other hand, if you were selling maybe 100 of these tokens, right, each one at $1, which is like $100, someone is going to be more likely to take that order because the transaction cost is less than the amount of what you're selling, right? So you're selling $100, meaning $100 worth of tokens, right? It's going to cost you $10 to take that order, right? Someone is going to take that. If you're selling something, right, and it's going to cost less than $10, then someone might not take that order. So I mentioned this because on high cost blockchains, this is certainly something that you have to take into consideration when it comes to the liquidity that you're providing for buying and selling on COTI. We have already seen that it is a low cost chain, meaning that in order to interact with that blockchain, you're going to be paying pennies on the dollar, right? So this is not really an issue. So you can sell like, like $5 worth of a token, and that's perfectly fine, right? Because the transaction costs are not expensive. So going back into our example here, so we can essentially have an order for buying at a low price point, an order for selling at a low price point, right? And then we can say, I want to contribute a certain amount of COTI for selling at this high price point, right? Let's just say I'm going to contribute $100 or 100 COTI, I should say, which is roughly $7.5 at current prices, right? And then I'm going to buy within this range here, and I'm going to contribute 100 USDC, right? So this is my strategy. Current price, it's somewhere 0.075 is the current price. If the price shoots up here, right, into this range, I start selling my COTI for USDC. That USDC is now made available down here for buying at a low price point. If the price of COTI goes down into my green range, I'm buying COTI with USDC. The COTI that I acquired is now made available for sale at a higher price point, right? So this is how these things tend to work, right? Liquidity will rotate from one order to the next.
Yeah, so you're just recycling the liquidity and hopefully marginally growing it over the course of the simulation.
Absolutely. So yeah, that's a good way to put it. You're recycling that liquidity, and obviously the more that if the ranges that you pick, right, are quite good, then this means, for example, this means that the price of that token is going in and out of your range, right? So this gap here is essentially what we call the spread, right? It's known as spread. This is what you earned, right? So the more cycles you do, the better it is for you because you're doing a lot of buy low, sell high cycles, right? The more you're doing, the more you're buying low, selling high. And this is obviously to your benefit because this is essentially your profit, right? So that liquidity recycling is quite useful because you can set this and forget it and then have this just trade over time. And then obviously you capture those earnings as it's trading multiple times.
I shared. Oh, go ahead, Brad.
Sorry, I was going to say, I know we've got to get on to concentrated liquidity at some point, but the question I can't remember from last time is, are we compounding the dollars that we're buying with in that range every time we tap and come back down? Or is that like opt in, opt out, whether you like? It
auto compounds for you, right? Okay, so whatever you bought at a low price goes automatically into the selling high pile, and vice versa. Whatever you're selling high goes back into the buy low pile, right? So there's no way for you to like, let's say, every time I sell or buy, right, I do a cycle, I want to put a certain portion away in another location. Like we don't have that functionality, but actually that's a good idea, right? You might want to have this flexibility where you can say every time I complete a cycle, I want to take some small amount away from my strategy, right? Because I don't want that funds to be traded anymore.
This is what I want. A COTI. We did the vibe coding. I want somebody to create the agent, the AI agent. I really do. On top of Carbon DeFi, where they say every time I complete a cycle, take a little bit off the top. I would love to see that. Really quickly, before we move on to concentrated liquidity, I did share a link to a post I had made on X, since we're talking about recurring orders here. Last, Soren was saying that COTI, was sloshing between this, within this range. And I went back, I kind of played with it just a little bit. My sell high was a little bit lower than what he was saying, but it did wind up in about 4 months showing or resulting in a 40-something% ROI. And that was starting with, I think, 500 USDC, 0 COTI, and just waiting for that. And so with that auto compounding and those cycles completing, that wound up, yeah.
What was what were the ranges that you picked, or the?
I want to say 6 and 7 and 8 and 9, or 5 and 6. Hold on, let me see here.
Okay, hold on. I'll throw this on here. For selling high first, what's your starting?
My sell high, it was 8 to 9.
Okay, so 0.8. 0.08.
0.08. I'm sorry.
Okay. 0.09. So that, okay, and then your buy low.
0.06.
Okay, let me do that. 0.06
to 0.07.
0.07.
And I ran it from January, I think 1st. No, I just did January, from the beginning of the year.
Okay, let me do January
Something
1st.
like that.
So January 1st to April 25. Right, you said $500 you did, no COTI, right?
500 USDC, no COTI.
Okay, let's run that.
So there's your strategy, Soren. You're up to 67.92% ROI.
Jen, you are literally one of the best traders on Twitter, and you just showed it.
All I did, no, you noticed a range, right? I mean, if you see this sort of pattern, that's what this is. It's between this range, there's that volatility, right? This is what the simulator is for back testing that. Like, am I making this up, or could this actually be a profitable strategy, right? And this is taking that real historic data for these two specific tokens and showing exactly where it would go into your buy and sell ranges and how many times that would rotate. So since I posted that, or I ran that strategy, it was April 16th, I think I ran it. So yeah, in the last 9 days, it's gained an additional, 28% ROI. And that's on top of HODL also. So it's not like if the price of COTI goes up, then this is going to go up. This is actually on top of your HODL.
And I think this is so important for all the amateur traders out there, because every time the market makes a move that we could have benefited from as an amateur trader, we're either not at our screens, or we're asleep, or we're never exactly when it happens, Put this in place, have some limits that you're comfortable with. There's no guarantee you're going to make money over a 6-month period, but there is a guarantee you're not going to miss the moves if they happen.
That's exactly what it is. And I think that happens all too often. It was like I was sleeping and then finally that move happened, right? You have all your notifications set on whatever it happens to be, whatever app you use, and you slept.
No. Those nasty people know exactly when we're sleeping, and then they move when they're not there.
It's also like that the worst enemy of any trader is normally your own emotions, right? So like having a programmatic approach like this that's automated, that you can physically not do anything with unless you go and literally change it, takes the emotion away from it. Probably can do a good job and make you a lot more functional and a lot more profitable.
100%. You're actually thinking this through and saying, okay, here's the data, and let me make an actual educated sort of decision here and strategy, because our emotions do get in the way, and suddenly we feel that FOMO, or we feel that sort of, whatever it happens to be, that panic moment, and we panic sell or we panic buy. Or at least this, you can actually calculate a little bit and say, okay, here's my strategy. If I sell too early, at least I've made this much money, and this is it, and that's it. I'm walking away from it. But I didn't allow myself to get too greedy, because they're not our gains until we actually sell anything, right? It's all unrealized until. So a lot of this is really just preserving the sort of capital that you have and just being happy with, this is it, right? This is my strategy.
I like that point about taking the emotion out of it, because all us amateurs, that's definitely our biggest enemy. Yeah, we're not patient and we get very emotional about it. This takes care of both of them, in my opinion.
Yep, 100%. Glenn, thank you for running that for us again. I wasn't expecting that. I would have had to do it sooner if I ran it prior to the call and saw the bump up in the ROI.
It's a great simulation. Definitely something anyone can go and actually simulate. This is why we built that simulator, right? So you can backtest your trading strategy, right? This one specifically, right? Right now, as of like today, like if you would have started that in beginning of the year, January 1st up to April 25th, right? You would be 100% in COTI. Remember that we started with 500 USDC at the beginning. Right now, you'd be 100% in COTI, right? And essentially, the 11,000 COTI that you would have right now, right? If you convert that to USDC, you would have roughly 800 and looks like 839 COTI or so. So your ROI in here would have been the 339, right? So this is where you made that those 339 gains, right? The 339 USDC. So this is what we have, the simulator, so that you can backtest your trading strategy. Now we can talk about the other type of strategy provisioning, which we called concentrated liquidity. Now this one I would say is the most common one, because what most people are used to is providing a specific type of liquidity, which we called full range, right? And full range means essentially that you're providing liquidity between a price point of 0 all the way up to infinity. So unlike our previous examples where you were picking specific price points where you're buying and selling, in here you're saying, I'm going to buy and sell starting from 0 all the way up to infinity, right? Infinity here, it's a very large number, right? So we just say it's infinity because it's bounded by what the blockchain supports, right? In terms of its like precision, like what is the highest like number it supports. This is why we say it's infinity, because it goes from 0 all the way up to like the highest supported amount, right? A way to look at this on the price chart is essentially this, right? You can see that liquidity starts all the way up here, and then it goes all the way up to the top, right? Even though this thing goes up to like this chart goes up, it's at 0.11 right now for the price chart of COTI against USDC. It still keeps on going up. It's just not showing on this chart, right? So why is this type of like liquidity provisioning useful, right? If you are a project that's just starting out, right, you might actually not know what the actual price of your token is, right? As in how much the market is willing to pay for it, right? You might need for what we say price discovery to occur, right? And price discovery happens via people buying and selling, right? And then at some point in time, the market is going to agree on what price that should be, right? But this happens for every token that gets launched at the beginning. So when you provide this type of like full range liquidity, what you're telling the market is liquidity is going to be available at all price points for people to buy and sell into, right? And essentially at that point in time, depending on how much buying and selling happens within that position, there is going to be some current price that the market is going to agree upon, right? So right now, the current price in this strategy, right, COTI against USDC, the market price is 0.075, right? What we're saying is we're going to provide liquidity across this entire price point, right? And what we can do on Carbon, right, because you're providing liquidity, you can say, okay, if anyone uses my liquidity for trading, I'm actually going to charge you a fee, right, for you to trade against my liquidity, because I'm providing a service, right? I'm a liquidity provider, right? And therefore, I'm making tokens available for buying and selling. In order for you to use my liquidity to sell or buy into, you're going to have to essentially pay me a fee, right? So this fee, for example, we have a few different options here, right? 0.01%, 0.05, 0.1. But typically, you also have the option to set your own fee, right? And typically for like volatile token pairs, meaning like tokens that tend to have a high volatility, right? You might want to have a higher fee. For tokens that are less volatile, you might want to have a lower fee, right? So for example, COTI against USDC, I would say this is like a volatile token pair. You might want to have a fee of 0.3%, right? 0.3 or even higher. Consider like 1%, right? Like we see people trading meme tokens on other blockchains, right? And the fee that they're setting for these positions, they range from 1% all the way up to like 5%. I even seen stuff at 10%, right? Because some of these tokens are quite volatile, right? So this is where you have to like decide, right? What that fee should be. On the other hand, for example, if you're trading non-volatile trading pair, maybe like USDC against USDT, these are two fiat-backed stablecoins, right? You can see that the price has been within this range for quite some time. You might want to have a lower fee on that trading pair because there's literally little to no volatility for you to capture, right? So just keep that in mind as you're creating what we call this type of strategy, which is the concentrated type. Under the concentrated strategy type, you have the full range option, which is what I'm showing you. And this is typically the option that most new projects tend to start off with. And then as their token becomes more liquid, they tend to do other more advanced type of strategies, such as concentration at specific price points. I'll stop here, answer questions people might have.
Right. So this is basically, Glenn, that's great explanation. And this is basically then for projects that are building on COTI and looking to launch their own token.
Correct.
They should deploy a strategy like this, yeah? For me as a personal investor or personal trader, if I have, say, 10,000 COTI and I want to provide liquidity, I wouldn't want to do that personally. I don't want to give my COTI away for 7 or 8 or 9 or even 20 cents. But for projects that are listing, that's the option. That's the good option there, yeah?
Right. Like, yeah, correct. Most projects that are just starting out, they will have some sort of a full range liquidity, right? We call this a constant product liquidity positioning, right? Because projects, they typically are not in the market or in the business to manage liquidity, meaning they're not constantly managing liquidity, saying, okay, I want to sell here, buy up here. Like this is typically something that a project does not do. They just make liquidity available to the market for people to buy and sell into. And this type of liquidity, like full range liquidity, is essentially a hands-off way for them to provide liquidity to the markets so that anyone can buy and sell into this token at any price points, right? This is what most projects tend to do when they're new. As that project becomes, I would say, they have some time that they have been building for, right? Their token has had price discovery, right? They might decide, okay, we might go for like a centralized exchange listing. We need to work with certain like market makers, right? Because this is typically a requirement for you to have a listing on a centralized exchange, right? You have to have someone that is sort of market making for your token. That market maker might also decide, I'm going to market make for your token on chain, because that project might have this like prerogative where they want their users or their token holders to not only buy their token from a centralized exchange, but also be able to buy it on a decentralized exchange on chain, right? And that market maker might decide, okay, I'm actually going to provide maybe concentrated liquidity, perhaps not full range, perhaps because this token has been trading for 2 years, right? I might pick a range, right, such that that range is somewhere where most of the price action has occurred for this token, right? So this is something that you can also do with concentrated liquidity, right? It's a strategy type that exists for market makers and also for, like, I would say more professional traders. If, for example, you realize, like if you're looking at this chart that I'm looking, you'll say, you know what, most of the price action seems to happen within this channel. So this is where most of my liquidity, I'm going to be providing most of my liquidity into, right? And perhaps I want to charge maybe a 0.5% fee, 0.5, right? And I'm going to contribute some amount of USDC. This is not my wallet, by the way. This is Vitalik's, so I don't have this amount of funding. Do not come after me. Yeah, so this might be like perfectly reasonable for you to do, right? You might look at a chart. You might decide, okay, most of the action has been happening within this channel. This is where I'm going to provide my liquidity into. So this is a perfect option as opposed to doing like this full range where you're providing liquidity into certain price points where, you know, the price might never get there, right? So that is something that you have the flexibility to choose here. So I'll just run this simulation, and then obviously I will answer any questions as well. This one is telling me, I'm in the create strategy section. I'm not in the simulation section. So I'm going to go here. I'm going to simulate. While you do that, let me just pick these ranges. I think that's a good one. I was going to charge 0.5% for someone to trade my liquidity. Let's do 500 actually, because that's what we did last time. It's telling me if I do $500 or 500 USDC, I also have to provide roughly 4,200 COTI as well. So keep that in mind, because the range that we chose, is the current price of COTI is within the range that we chose. This means that we have to provide both tokens. So if I move this around, you can see what ends up happening, right? As I'm moving it up, I have to provide more COTI, right? And then as you can see that the screen is changing, right? So just keep that in mind. Based on the range that you're choosing, you're going to have to provide some amount of the other token as well.
So Glenn, just to run through this really quickly, just kind of comparison, because for concentrated liquidity and for recurring, you are buying and selling in both of those strategies. Recurring, you are choosing where you can buy, you're choosing where you can sell, and those two ranges do not overlap, right?
Yes.
And what's in between is your profit. And you are not obligated to provide to both sides. So you don't need to provide both of those tokens. You can choose whether or not you're going to be buying or selling. With a concentrated liquidity, you're choosing a single range to buy and sell within, and you are obligated to provide both of those tokens. And depending on the range that you've chosen, it's not necessarily a 50-50. You may have to, because you can choose your own range, you may have to provide more of one of the tokens, like more one than the other, right?
Correct. Yeah, that's true.
Okay.
So so when you do a concentrated liquidity positioning, depending on the range that you choose, right, it might not be that you have to contribute liquidity in equal proportions, right? Because your range, for example, could be lopsided, meaning that you can have this thing be a lot higher than your range on the lower side, the buy range here, right? This is the current price here, right? Everything below this, it's a buy range. Everything above that is like a sell range, right? So essentially what's going to happen here, as the market price goes up, right, the COTI that you are contributed here gets sold off for USDC, right? Such that if this market price of COTI goes above 0.10, then you're 100% in USDC at that point in time. Now, once the price of COTI like retraces, it goes in the opposite direction, then the USDC that you had is used for buying back COTI from the market, right? So it will slowly get converted back into COTI. And you might reach a point where you actually are 100% in COTI if the price of COTI goes below 0.05, at which point you have no USDC. You're 100% in COTI, right? And essentially the fee that you're setting here is what you're telling the market, what you're going to charge them for them to actually buy or sell into your strategy. So for example, if
Glenn, hold your thought for 1 second.
Yeah.
Soren, you unmuted. Did you have a question about what Glenn was saying?
Yeah, so I'm still under the assumption that we talk about a project providing liquidity
Yeah.
on Carbon DeFi, yeah?
Correct.
my first question is, who decides how much liquidity they're going to provide?
Who decides, right? Typically, that is the project to decide, right? Depending on how much funding they have. Some projects,
so they could be silly and provide $50 worth of liquidity, or they could be serious, providing $10,000 or $20,000 worth of liquidity, and you guys wouldn't interfere either way.
Yeah, we would not interfere either way. It's up to the project to decide. Like if the project wants to decide, I want to provide concentrated full range liquidity with maybe 10,000 USDC. In our example, they're going to have to provide 132,000 COTI as well, right? So they decide how much liquidity they're going to be providing.
Okay, and how does this deal with parabolic movements either way? When you set those sort of ranges, and I know you spoke about infinity in the beginning, but you focused a little bit more on a more fixed range. What happens in a parabolic move either way, up or down?
Yeah, so in this example, it will deal with it perfectly fine. What it means, like let's say COTI's at 0.07. If it goes from 0.07 in one block, right? Like the current block is at 0.07. When I say block, I mean the latest block that has been mined in that blockchain, right? In the next block, let's say it goes up to $1, right? What it means is that a bunch of the tokens that you provided, in this case COTI, between like 0.07 all the way up to 1, they would have been sold, and you have now a bunch of USDC in your position, right? If COTI keeps like going into this parabolic rise, if it goes up to like $1,000 next, right, you're still selling COTI all the way up, right? Because you have COTI distributed between 0 and infinity, right? So there's always going to be some COTI available to sell. It's never going to run out. And it's also true in the opposite direction. If you see a parabolic decrease in price, you're going to have some USDC that's always going to be made available for buying back COTI from the markets, right?
Yeah, so, and this is actually more interesting, Glenn, because if you have a parabolic movement downwards, yeah, and let's just play the devil's advocate. There's something bad happened in the project, yeah. And what you're basically saying is that with a parabolic move downwards, the liquidity that I provided is set such that I will continue to buy my own tokens that now I really don't want to buy at a parabolic downturn.
Right. You
get what I mean, yeah? So
correct.
So a little bit, we're talking a little bit nefarious actors here, maybe, yeah?
Correct. If you're a project where you're ensuring with full range liquidity is that your token holders, they will always have some liquidity available to sell into, even if there's like a parabolic, if the price goes downwards in a parabolic, manner, right? There's always some liquidity that holders can sell into, and it's true in the opposite direction as well. There's always some liquidity available for people to buy as it's going up in price. So this is why full range liquidity. It's something that I would say projects that have been around for a while, they tend to start with full range, and they'll keep that full range liquidity. And then as they evolve over time, right, that project then becomes, they not only have full range liquidity, but they'll also have some sort of like concentrated liquidity positions as well. And because these projects, they don't necessarily tend to be like in the business of market making, the people that are providing that concentrated liquidity is typically their own token holders, right? Because they look at the price chart and their token holders might decide, I'm actually going to provide some concentrated liquidity, right? Except that I'm going to do it in a range where most of the price action has occurred, because this is beneficial to me to have liquidity within the range where the price action is happening, because as people are buying and selling from my liquidity, I'm earning those trading fees. Right, so this is why you want to decide on a range where the price action has occurred, because if you pick a range that, for example, like up here, like this range is where the current price is not, then that means that this liquidity is not being utilized for trading until the price of COTI gets up here. It's not going to be utilized. The same thing, if I pick a range down here, this liquidity is not going to be utilized until the price of COTI goes down here. So this is why people that are, I would say, more professional, they might want to provide concentrated liquidity. So this is what we see with most tokens, right? They have their constant product pool, which is buying between 0 and infinity. And usually like a market maker or some of their token holders, they're also providing concentrated liquidity within certain price points or range.
Excellent. I mean,
Trace,
and I
are
hope,
you? Oh, go
I
ahead.
honestly, sorry, go ahead, Trace.
No. Sorry, go. Finish your thoughts. You're fine. No, you had something to say. Unmute.
Yeah, and I just think this is amazing, and I really hope that a lot of the projects that are now building on COTI and are looking to launch their tokens or have already launched their tokens, maybe on other networks and things like this. I hope that they look at this and understand that it's actually quite straightforward and very cost efficient for them to do so. But my last question, maybe Tracer had the same question. How do they actually register their token with you guys, Jen or Glenn?
Yeah, no need to register. You typically, if you have a contract address for your token, you can type it into Carbon, and then it will pick up that token. So what that means is that you don't need to get our permission to trade anything on Carbon DeFi. You can create a strategy for any 2 tokens, even a token that you created, 1 second ago. Once that token is created, you can trade it on Carbon DeFi. What I should say is that at some point in time, COTI will have what we call a token list. Most blockchains will have a token list, and that token list is sort of like a registry of tokens that exists on that blockchain, and people can attach like certain information to that token. They might add like a description, they might add like a nice icon, etc. So for example, in here, we have a token list. I believe this token list might be coming from CoinGecko or a combination of CoinGecko and CoinMarketCap, or both of these plus something else. But you can type in a name of a token like COTI, right? And then you get COTI and GCOTI, right? They're both listed here. The COTI blockchain will have its own token list. And then that's also going to be available for people to contribute their tokens into, and then they can attach a nice description to this token, a nice icon. And what Carbon will do, it's just going to go to that token list, and then it's going to actually pick up the tokens that exist there, right? So if you create a token, you add it to this token list, Carbon will look at that token list, and then it will actually pick it up, and then you'll be able to search for it. But if you do not have that token on that token list, you can always just type the address of that token. So I'm just throwing out some random numbers, and you type that address, the contract address of that token, and then you'll find it. So you can see here that it says try searching it for by address. So for example, if you create a token, you forgot to add it to the token list, just type in the contract address, and then it'll also be found on Carbon DeFi.
This isn't just for projects either. So in the future, I'm sure there will be additional DEXs and things on COTI. So if there, is a liquidity pool or something like that on a different DEX, and you want to go in and trade that token on Carbon DeFi, you're like, I don't want to just spot trade. I don't want to, I want to set a limit order. I want to set a range order, whatever it happens to be. It's not like your token by the token project or by a user or token holder has to be listed on Carbon DeFi at all. Whether or not you are making it tradable as a token project or, a trader or someone coming into Carbon, you can add that token address and access that token and start trading it on Carbon. Tracer, you unmuted earlier. Was that your same question, or did you have a different question?
No, I just wanted to go back to something, and this side of it, fascinates me. And everybody likes a parabolic move on a high time frame where we see that nice curve, or that nice curve, and we talked about that. But anybody who's traded on Binance, like back in the day, 2020s, right? We saw these cascading liquidation or liquidation wicks to the bottom and the up and the downside, right? And we call those stop hunts, right? So I don't know how much you could talk about oracles, but could you tell us a little bit about where you pull your pricing data from, and just what happens in a situation like that, where in CEX we would see stop hunts and funny wicks. If anybody's worried about that kind of stuff with Carbon, could you just talk to that a little bit?
Yeah, Glenn, I'll let you go ahead.
Yeah, so one of the things on Carbon DeFi, so we do provide pricing here, right? So you can see that we're pulling the current price of COTI in terms of US dollars, right? Or in USDC, which is a USD backed stablecoin, right? This pricing here is strictly for display purposes, right? Because we want to make sure that, you as a trader can actually know the current price of that token, but also have like a price chart that you can trade, right? We can also give you the price of COTI against like Pepe, right? Like it's 8,570, right? The price of COTI denominated in Pepe, right? What we're doing here is essentially we're figuring out what the common denominator is, right? Typically, all tokens, they tend to have liquidity against like USDT or USDC or something like ETH or WBTC, right? Same thing for Pepe, by the way. And then what we can do is we can stitch these two charts together, right? If they have a common denominator, and let you trade COTI against Pepe, right? Like this is what the COTI Pepe chart looks like. If you want to trade this chart, you can do so, right? So just keep in mind the price here is strictly for informational purposes, right? And you can even, for example, as you're creating a trading strategy, let's say the price of COTI against USDC, let's go back here, right? You might say, okay, well, you know what? I actually think that this price that you have for your 0.07, it's actually not accurate because I just saw the latest trade on Binance and it was something else. You can always come here and you can edit the actual price of what COTI is against USDC. Let's say that might be 0.10. For whatever reason, our data might be outdated, right? So you can always come here and then you can update the current price to be what it actually should be, right? Although I would say a lot of the times our data, for example, like we can say here, like it looks like market prices provided by CoinGecko, right? So it comes from CoinGecko. CoinGecko can certainly have incorrect data. So keep that in mind, right? So always verify what the price of that token is against like multiple sources. So that keep in mind. So why am I telling you all this? Because you're asking me about oracles. And to get to the oracle question, we do not have a reliance on oracles on Carbon DeFi, right? Whether that is for buying or for selling, we don't rely on it, right? Some oracle providers, like for example, Band, I believe they will be providing historical price data as well as live data of tokens. What we can do with that data is we can utilize it to feed it into our application so you can have nice price charts, right? But Carbon itself, the protocol, does not utilize that pricing data for buying or selling. Instead, it relies on what you tell it to do. You might decide, I'm going to buy at this price point, sell this price point. This is what we go by. Exactly what you, the trader, tell us, right? Jen.
So in a market with
Tracer,
so in
ahead.
a market
Sorry.
with low liquidity, like yeah, in a market with low liquidity, let's say like with COTI V2 right now, like it is a low liquidity market. So theoretically, the price trading on Carbon DeFi could be totally outside of the other oracles like CoinGecko, CMC, etc., right? Because with Carbon DeFi, you're basically setting, or the users are permissionlessly setting the market. Is that correct then?
Yeah, so the price of COTI across different trading venues, it's not going to always be the exact same. Like, for example, COTI on Binance versus COTI on Coinbase versus COTI on Carbon DeFi on the COTI blockchain, they could be off by a fraction of a cent, right? This is certainly something that can happen. What ends up occurring a lot of the times is that you have someone, we call this person an arbitrageur, right? They will monitor the sexes and the dexes, right? And what they'll say is, okay, you know what? The price of COTI on COTI chain, on the COTI blockchain, it's actually trading very low, right? And on Binance and Coinbase, it's actually higher. So what I'm going to do is I'm actually going to go to the COTI blockchain. I'm actually going to buy a bunch of COTI from there. And then I'm going to transfer it to Binance or Coinbase. And then I'm going to sell it on these trading venues at a higher price, right? And that difference is my arbitrage, right? Profit that I'm capturing, right? So this is certainly something that could occur, right? Where the price on chain for a certain token might be off as compared to another trading venue in another location, right? Typically, what we expect is these trading venues to all be relatively close when it comes to the price of a token, because you tend to have people that are doing the arbitrage, and then obviously they're equilibrating prices across all of these different trading venues.
I think Jen wants to jump in and ask anybody if they have to leave, but I have a follow-up question after.
I do. I wanted to say I know that we've gone a few minutes over. So if anyone does have to leave, feel like I completely understand if you have to drop. And if you do, before we get to Tracer's next question, I just want to make sure to, thank you guys for joining us in case you drop while we're in the middle of the next question or discussion. Tracer, go ahead.
The arbitrage and Oracle's question might sound funny, but anybody who's been, in our little silo for the last 5 years is we've had and it used to be worse, but sometimes a massive discrepancy between the V1, like our native token, and the ERC token, because the ERC token was, tradable by basically everybody. And the V1 people were kind of siloed. So it's just, I think it's a question that some people, moving into the Carbon DEX might be asking, where the pricing data comes from. And, this token that, being live on V2, is it going to be worse? Is it going to be worth less than going somewhere else and trading the ERC? So that's kind of why I wanted to ask that question.
It's not, but there's so much more to it also. You talk about Oracle extractable value, that type of MEV. You talk about Oracle manipulation. You talk about any sort of delay in price feeds and things of this sort, Like I know Band is going to be providing price feeds and stuff, and they're fantastic. But there are certain concerns that people have had, especially if you've been in this industry for 5 years and you've experienced that. It was more common than it might be now, but it's a completely legitimate question. It was something where Carbon DeFi, Bancor was pretty big on, we want all of this to be native to the protocol and not have to have any of these dependencies. Like Glenn said, we will definitely, make use of Band. Like we're definitely collaborating with them and getting all of their historic pricing data in there for the simulator. And that's super, super important. But that is to run those simulations accurately,
Yeah.
Glenn, were you going to say something? Go ahead. Oh, and Brad.
I was going to say, it's understandable that the price of COTI on the native COTI token, the non-ERC, right, might be at a different price than the ERC token, right? Especially if most sexes, they are using the ERC version of COTI, right? Perhaps what's occurring is, I am not sure like how you get between the native COTI token and the ERC20 version of COTI, right? Like that conversion process might have some time delay, right? In which case the person that's doing the arbitrage cannot instantly bring these two things up to parity, right? And we see this all the time. For example, in like Korean exchanges, right? They do not have market makers there, right? Like market makers do not operate in Korean exchanges. So a lot of the times what you end up seeing is the price of like Bitcoin, like Ethereum in Korean exchanges, it's different than the price of Bitcoin and Ethereum on exchanges outside of Korea, right? And there is, a lot of the time, there is like an arbitrage trade that you can make in order to actually capitalize on these differences, right? So that is like a perfectly thing that could happen. Carbon on COTI, obviously we're using the version that exists on the COTI blockchain, right? I believe this is the same version that also exists on the exchanges. So, if anything, if that means anything, then I'll just have, I would say, the price should be tracking what you see on most exchanges. But like I said, you can always set that price to be whatever the current price is, right? Like you can modify the market price and you can set it to be what it should be, right? Like we were getting the market price from like CoinGecko, right? But CoinGecko might be an inaccurate source. If you have a more accurate source or a more accurate price, you can always modify that price.
Brad, you were going to say something when Glenn started.
That's right. I feel like it would be remiss to talk about to not talk about like impermanent loss as well. So like I think for a lot of people it'd be good to understand like concentrated liquidity, I guess like its perks and like probably more capital efficient. You can catch more trading fees, but then also what happens when the price moves out of that trading range, like especially within the context of a permanent loss. I think that would be a good insight for people who haven't done this before.
Yeah, I can certainly run the simulation here. I think we ran.
I think it's also, Glenn, really
Yeah.
quickly, I think it's also important that people understand what impermanent loss actually is, right?
Yeah, for sure.
Impermanent loss is when you are, you provide liquidity and you wind up with less than what you would have had if you had just hodled. Glenn, you can paraphrase it. You can give your own, you might have a little bit more of a technical explanation, right? But before we actually go into impermanent loss, especially when we have these different order types and things, we'll focus on obviously concentrated liquidity or providing liquidity. But maybe you want to, if you wouldn't mind, at least speaking to that first before going into it.
I think that's a perfectly reasonable explanation in the sense that what impermanent loss is, right, is essentially the difference between hodling, meaning not providing liquidity, and if you provide liquidity, what you've ended up with now, right? So we can run like a simulation here. Let me just see what this looks like, right? I think this one has a negative ROI. So this is like a perfect example, right? In this simulation, we provided 500 USDC. It was a concentrated liquidity position with a 0.5% fee, right? So I'll run that again, right? So in this scenario, actually, it's I'll just make sure. I'm providing 500. The simulators tell me that I'll also need to deposit 3,500 COTI, right? Because I'm providing concentrated liquidity. The current price of COTI is within my range, right? So this is why I have to provide the other token as well, right? And as I'm running this simulation, I'm back testing it, right? You can see that at the end, meaning today, right? If I were to like pull that liquidity, it's telling me that I am down roughly $40, right? So in this scenario, I would have been better off not providing liquidity at all, right? And then just keeping my original token balances, right? Which was the 500 USDC, and I believe it was the 3,300 COTI or so, right? Because if I were to take all of the COTI that I ended up with today, and then I sell that for USDC, right? And then we have essentially our summer here, right? I would have been down, right, than what I originally started with, my HODL value. So you can see my HODL value was around 768, right? Portfolio value today is below that, right? Portfolio value is this blue line. It's below the 768 that I started with, right? And it's 768 because remember, I started with 500 USDC, right? And then I contributed roughly 3,500 COTI or so as well, right? And then it's telling me that the price, the USD price of these two things combined was 768 at start point. Right now, when I ended this simulation, it's below that. It's $40 less. So this means that I have essentially lost funds by providing liquidity. I would have been better off just holding my 3,500 COTI and my 500 USDC.
May I explain something also, Glenn, a little bit differently than what you were doing, but really to the same effect, right? Yeah. So earlier when I was asking and wanted to clarify the difference between a recurring strategy and a concentrated liquidity strategy, it goes for the full range as well. But in one situation with providing liquidity, those ranges are overlapping. You are buying and selling within that range. So say people start panic selling. We were talking about this earlier, right? As they're selling, you as a liquidity provider are forced into buying that token. When you are selling something, you're forced back into buying it. When you're buying it, you're forced into selling. That's just how it works, right? Glenn, am I?
No, you are 100% correct, right? So as the price of the token is going down, right, and you're providing either concentrated liquidity at a range or full range, right, you're essentially buying the token that is worth less, right, out of the two. And as the price of that token is going up, meaning it's on a parabolic rise, you're giving up the token that's worth more, and you're buying the token that's worth less. Right. So this is exactly what you're describing.
Right. Okay. So for concentrated liquidity, this is why Glenn was talking about token projects doing a lot of this for that full range, for that concentrated liquidity. This is how they're creating their markets, because for them, they want to ensure that their token is available for trading. They're not really thinking, how much profit am I going to make for this? They just want people to know that their token is there. They want to be able to buy it or sell it. They want to have a marketplace for themselves, right? This is for the users. This was something, because I made a comment here in the group. Bancor invented the constant product AMM. Bancor invented concentrated liquidity. Bancor now has carbon DeFi and this, what we call asymmetric liquidity, with the two different orders, right? But this is because the protocol for constant product, or like the mechanics of it, for constant product and concentrated liquidity, are prescribed for you. You are buying and selling within this single range. You're providing your liquidity. That's just how it works. So this is the alternative to that, where it gives the user much more control and flexibility, where if you want to sell high, you're not forced to buy back, or I'm sorry, if you want to, sell high, you're not forced to buy back in if you don't want to, or make any sort of buys and sells that you don't determine on your own. So it's a little bit different in that sense. But Brad, this is why, like, if the simulator too, I'm glad that you brought up the impermanent loss, because that negative ROI that's coming into play, that is your impermanent loss. And I think that more people need to understand that. When you see these, get 6% APY, or get this, or here's the rewards, they're not showing you what is actually happening with your liquidity and what those losses are on the backside. They want to show you what they're giving you in terms of those rewards, right? But think about what we just spoke about in terms of providing liquidity and what's actually happening with your liquidity, because you might be getting that, APY or APR that they're throwing out there. And I just say they in DeFi in general. I'm marketing and I'm saying it like I'm just saying, So, we see that a lot, and I hate to see that, because we have so many people that are new coming into the industry that don't know any better, and they're sold on these pretty numbers, and they don't really realize how much they are losing on the back end of that. So I'm glad that you brought that up. Thank you. Glenn, if you wanted to say anything else, sorry, I went off on my own, No,
I think you raised some very important points. I think the other thing that I was going to say here, obviously, I think you mentioned, let me just show you something here. This might clear up some things. Let me just do 3 months. Okay. This is our sell range up here, right? This is our buy range down here. The COTI price right now, it's at 0.07. You can see that it's up here. When you're doing a concentrated liquidity position on carbon, what you're doing is essentially you take the sell range, and then you take the buy range, and you're overlapping these two things. This is a concentrated liquidity strategy. Essentially, you're buying and selling across this range, right? And essentially what this means is that your ranges are non-overlapping. So these are non-overlapping ranges. These ranges are now overlapping. So as you said, right, if the price of the token is going down, you're forced into buying, right, from the market as that price is going down, right? And then obviously the opposite happens as well. If the price of the token is going up, you're forced into selling across that range that you selected, right? So keep that in mind, right? And then obviously, like, you do have a fee that you can set. Like we did set a fee in the simulation, which is 0.5%. But even with a 0.5% fee, right, we still ended up with a negative $40, right? So even though you're charging a fee, we would have been better off not providing liquidity at all, because one of the tokens significantly went down in value, right? And you know what, we were forced to buy a bunch of that token with our USDC, right? So this is something that tends to happen, right? When that token goes down in value, you're buying the token that is less desirable. And the opposite also happens, right? If that token goes up in value, you're giving up the more desirable token for the less desirable token, right? And what this could mean is that you could have large losses, because if you would have hodled that token without providing liquidity, you probably would have made more, right? So this is always a concern that you have as a trader, right? When you're providing liquidity, right? You could run into an issue where you have like what we call an impermanent loss, right? Or you can have an impermanent gain as well. So like it applies in both scenarios.
I think this is something that I wanted to bring up again also before we end it, because I know that we are now 20 minutes over. So I apologize and thank you once again. But the last call, or one of the recent calls, I was saying that the simulator isn't here so that we can say, look at how fantastic every strategy is and how fantastic Carbon DeFi is. That's not what this is. This really is a learning tool. This is for users to go in and say, okay, what is providing liquidity? What's happening when I provide my liquidity? What would have happened if I had done this? I say what is, but it's really what was, because it is back testing. So what would have happened if I had done this, and what would the results have been? And they can get a better understanding of what these actions really may result in, or what's happening, and what the possibilities are. It's not always going to be positive and pretty, but that's also the point as well, is to really let users know that you could be making moves that won't necessarily benefit you in the long run. And here is a tool with this real historic data that will allow you to make a more informed decision. It's not provide liquidity and get 20% APR. It's run it through here and decide if this is actually going to benefit you. Okay. Well, do we have any? Brad, go ahead. You unmuted.
Oh, no, I was just going to say, I absolutely agree. I'm such a big fan of this simulation environment. Like, there's so many times where I could have saved myself from being burned had I just tested strategies beforehand. And I think also, like, I would encourage people to like play with it, like just play around with it, get used to like the tools, run simulations, and concentrated liquidity might be for some people where you're confident that price is going to stay in a certain range. You're confident you're going to pick up lots of trading fees. You're not going to have impermanent loss. That's great. For other people, you might want to sell repetitive, sell high, buy low orders, and that might work for you. But test all of the different strategies and do it in the simulation environment. I'd really encourage it. It's a great way to learn about DeFi. It's a great way to learn about providing liquidity, and it's fun. So why not?
Awesome. Thank you. I do agree, though. I mean, it's a nice way to actually just get to know things. And honestly, you don't even have to provide liquidity or buy low and sell high. If you just say, you know what, I just want to sell, like Glenn was talking about, that 125 to 150. I don't want to buy back. I don't know what I want to do. I'm going to take that and I'm going to sell my house, or buy my, pay off my house, whatever it is. Just set the sell range. There are so many things that you could actually just do depending on what you want to achieve. That's how you create your strategy. Soren, you are unmuted. Did you want to add one more thing?
Yeah, just to add to what you and Brad were just saying, there's lots of people who say, okay, if the price drops to this point, I'm going to fill my boots. And you can use this exactly the same. But actually what I wanted to say, that's just because I listened to you, I was reminded. Actually, what I want to say also for all the projects building on COTI who are launching tokens, this is permissionless, yeah?
Yes.
Yeah, with a big fat line under permissionless. Yeah, boom. It's so simple to set your tokens up, and I'm sure you or Glenn or somebody else from the team will also be more than happy to help if there's any questions from
100%. Yeah, anybody who is looking to create a project, to, you know, who wants to create a liquid market for themselves, 100% reach out to Glenn. I mean, it's Primal Glenn here. Glenn, I think your handle on X and your Telegram, they're all the same. It's all Primal Glenn, right?
Yeah, they're
It's
all
all Vitalik.
Do you hear him? He said it's all Vitalik.
no, that's my impersonator account. But no, it's all Primal Glenn. Happy to connect with other projects on COTI that might be launching a token or might already have a token, right? They might want to bridge that over from some other location. You're interested in providing liquidity on Carbon. We can certainly help you with that. More than happy to give you a walkthrough of the protocol, right? Go on the call, right, and answer any questions you might have. So yeah, feel free to reach out to us for sure.
Perfect.
Amazing. You guys are so fantastic. First of all, like, you're fun, and so I appreciate that. And I mean, you had amazing questions. So I hope that you guys took something from this, and all of our viewers. And I mean, reach out to any of the guys about your questions, whether it's COTI or it's Carbon DeFi, or, you know, just engaging at all. So thank you again. I genuinely enjoy having you guys on.
Thanks
I'm
for
excited.
having
Amazing
Sorry, I cut you
tools,
all off.
guys. Like,
Thank
amazing
you.
tools. Really cool. Really cool. Thanks, Jen.
Thank you. Of course. Okay. Well, excited for everything that's to come with COTI. So we'll see you tomorrow on Crypto and Cocktails. And then what do we have? A COTI Confidential on Sunday?
That's right.
That's right. Okay. So the next 3 days is busy. Thank you, guys.
Let's go,
And thank you
Carbon.
again.
Let's go.
See
We'll
ya.
talk soon. Bye, guys. Thank you.
Take care, guys. Bye now.